The debate between value and growth investing gains traction during every bull market. The fundamental difference between the two is mindset. Growth investors scout for brighter business prospects. A higher top line generally leads to higher profitability and hence the up move in stock prices. On the other hand, value investors look for assets that may not lead to immediate profitability. Value unlocking generally happens through corporate actions, whether it's bonus issues, rights issues, mergers and demergers. There are ample examples of demerged companies generating more shareholder wealth than their parent or holding companies. Momentum investing is most probably related to growth investing. And that's because India is a growing economy, and in such developing economies, investors tend to assign higher valuation multiples to growing companies. Expansion of valuation multiples leads to movement in the underlying prices. Fundamental value unlocking events are relatively rare in the market. For this reason, it is difficult to find value opportunities that also have momentum. So today we'll discuss all about momentum investing. First, the pros of momentum investing. Number one, it gives you an opportunity to turn investments quickly into profits. It works best for investors who do not want to rely too much on the uncertainties of a long-term approach. Second, in an environment of shrinking business cycles, it's difficult to take a long-term view of how businesses will respond to change. The rapid evolution of technology offers regular opportunities to momentum investors to churn their capital from one company to another. Third, understanding a business as an outsider is difficult. Company insiders have access to richer information, and there's always an information asymmetry. Momentum investing gives you the opportunity to make hay in the stock markets without having to understand a business in depth. Now talking about the downside. Momentum investing has similarities with the game of musical chairs. One needs to ensure that they can exit their positions or find a chair to sit before the music stops. The stock markets, as we know, are notorious for price manipulation. At the top of the cycle, operators, insiders exit their position, and when the music stops, smaller investors are left with stocks that are substantially lower than their purchase price. Spotting stocks that have momentum may not always give stocks that are fundamentally strong. If you fail to exit your positions at the right time, you wouldn't have the confidence to hold these companies in your portfolio amid volatility. Momentum investing requires higher involvement in the markets, not just in terms of time, but also in terms of transaction charges to the government and brokers. Frequent entries and exits from your stocks require great mental strength. In the short term, the stock markets are naturally volatile. Watching your hard-earned money go down the drain is no easy feeling. Similarly, it's not easy to control the exuberance when you make quick money from stocks. Such an emotional outburst is not good and is generally inversely related to profitability. Having a set of rules or framework helps control this emotional aspect of momentum investing. So here are a few pointers on making this framework. Number one, use technical analysis extensively. A momentum-based approach essentially means you're interested in the price of the stocks and the rising price, more importantly. Mastering the indicators and oscillators is a must to succeed in the momentum game. Try not to bring in fundamental angle into your analysis. Studying fundamentals can help ensure that you can sit on your positions in case of extreme volatility. However, it is not always a guarantee that you would get momentum-based opportunity in fundamentally strong companies. And finally, sectoral movements which provide a good view of how market participants think. They say all is fair in love and war. In our context, I would say any approach, growth, value, momentum or contrarian is fair in the stock markets, provided it makes money for you and suits your investing style. I hope this video helps chalk out a framework for you. But don't forget to like, share and subscribe to the video. Thank you for watching.